I realise I'm the only thing between us and lunch, so I'll try and keep this short. Essentially, Prestige is a lending business. We have a number of lending funds and a number of lending businesses in the United Kingdom. We only lend in the UK. We focus on really two key areas. We have what we call asset finance and invoice finance. And primarily on asset finance, we tend to focus on the rural community, particularly in the farming areas and the food processing areas of the UK. And in invoice finance, it tends to be small and medium-sized business. If you see what's going on in the UK and elsewhere, you will see that there are a number of issues growing, particularly for small business. I'm going to skip through some of these slides because I want to get to a particular slide. But there are, for example, a number of key considerations for small business, whether it's a farm business or a food business or any small business. These are that the price of electricity in the UK is almost the most expensive in Europe. It hasn't materially fallen in price in the last year, despite the fact that we all know that oil has fallen 50% in value. So we have very, very expensive electricity, and that becomes an increasing burden on small business. And so electricity today is about 90% higher in price than 10 years ago. In fact, oil is even higher. So that's the first issue. The second issue for lots of small business is that clearly small business are still struggling to gain access to credit to invest in their business. And so this is a wonderful graph from about 18 months ago from The Economist magazine, which shows that credit to small business has literally fallen off the edge of a cliff and has not recovered. And despite this being 18 months old, that line has not recovered. So that's the second problem. And then really the third problem is that increasingly we have a problem where the banks are taking a very long time to make a decision. So today the average £1 million commercial loan in the UK takes upwards of 6 months to approve, whereas previously it took maybe 2 or 3 months. So the opportunity for us is to help these small companies, these food businesses, these farming groups to gain access to credit and to become more efficient. So the final part of this is clearly about efficiency. Now the UK has some of the most valuable farmland in the world, and what that means is that a lot of the farming community is able to pledge that as security for borrowing money. And so the other final issue here is that increasingly there is a big problem with food waste, plant waste, animal waste and farm waste being put into landfill. As you know, the UK, a little bit like Israel, is a small country. Lots of people want to come and live here, and there's an increasing burden on many parts of infrastructure. So for us now, we're being told by the government, the European Union, that we can put less and less things in the ground in landfill. You have to do something else with it. So increasingly now, even with plant waste and animal waste, like birds and animals and so forth, you can't put that into the ground. Even things like tomato plant waste can no longer go in landfill. And things like, excuse me, chicken blood of all sorts of things like this, turkey blood and things like this can no longer go into the drains and the sewers and so forth. They have to be disposed of ecologically. So if you're a farm group or a food producer, you're worried about high costs of energy, particularly electricity, the increasing cost of waste disposal, And of course, everyone is under increasing pressure to become more efficient, to produce more in less time, to produce more using less energy. So how do you do that? You get more high-tech equipment, machinery and vehicles, and it's about scale. But of course, that's very expensive, and that requires a very consistent and increasingly expensive investment in that efficiency. And of course, when our friendly bankers are not lending like the way they used to lend, in the way that we were previously accustomed to, that's the problem. So, but that's also the opportunity. So for us, we have several businesses in the UK that run around the UK talking to small business, to farmers, to food businesses, and saying, we can help you solve your problem. We can help you save money. We can help you become more efficient. We can help you become more profitable. So a lot of our customers have relationships with the government, where the government buys the energy that they don't use. And of course, a lot of the food businesses use the energy, so suddenly they don't have an energy bill. So suddenly they're more independent, they're more profitable than they were previously. So the areas that we finance are more specialist than a traditional bank. And the way that we lend is also more specialist than a typical bank. So, for example, a bank will typically lend you cash. We will typically lend you an asset. So, for example, if I get to the right slide, you will see that we will lend on all manner of specialist equipment, machinery, vehicles. We also do some land and some buildings, and as I said, increasingly on renewable energy, particularly where you take that waste and turn it into some form of energy. Biorefining, anaerobic digesters, biogas plants, solar and wind and so forth. And of course, this is what we call non-commodity lending. If I take a bank, I go to the bank for a car loan, lots of people do car loans. I go to the bank for a home loan, lots of banks do mortgages and home loans. This is a lot more specialist. So we will finance things like milking machines for a dairy, or a sterilization, pasteurization machine for a food company, or a turkey dressing machine for a poultry producer. These are specialist bits of kit. They cost hundreds of thousands of pounds, and the key here is we can make a decision much quicker and much more informed than a typical bank, because this is what we know, this is what we understand. If you look at what's going on in some of the banks in the UK and elsewhere throughout Europe, almost all of them are in a consolidation and retrenchment phase in their evolution. HSBC is Europe's largest bank, and it's made at least 100,000 people redundant, and it has closed at least 100 businesses or sold them off. Some of those businesses were profitable. The issue that you've got now, particularly in Europe, but across the globe, is that a lot of these banks have got this very expensive capital. They've got these new rules to make sure banks are safe, and banks are becoming increasingly like a utility, not like a hedge fund, which is how they've operated for the last 20 years. So they have this Tier 1 Basel III capital, these new rules, and they're going to have 3 times as much capital today as 5 or 6 years ago. And what that means is they can lend less, and they have to be more careful with where and who they lend. For us, that's the opportunity, because we clearly don't have the cost base of a bank, but we have the customer base. So in our main asset finance business, which is based in Cambridge, near Cambridge University, we have a business that has been in existence for nearly 15 years. In 15 years, we've done almost 16,000 transactions to 7,000 customers, many of them farmers, to buy, to rent, to lease equipment, machinery, and vehicles. And this is the other part that is perhaps what's different between us and a bank. A bank will lend you cash, and you tell the bank that you're going to buy a piece of equipment. But equally, you could buy a Ferrari and live in Paris for a year. The bank doesn't really know. With us, we don't finance Ferraris. But what we do is we will get you the equipment and we will rent it to you or lease it to you in a finance agreement. It could be a loan. We do cash loans, but it could also be some form of hire purchase agreement or lease or operating lease, which means that from a security point of view, we typically get a cash deposit. Legally, we own the asset until the very last payment. And on the last payment, the customer legally owns it. So we have the security of the asset throughout the entire life of the transaction. And only at the very end of the transaction do they legally own it. So it is possible that they could pay for it for every single month and miss the last month, and technically we still own it. So when you're having these kind of transactions, there's an element of rental, interest, and capital. And so that means for us that we have lots of security, but also now, because of the way the banks are behaving, we have the ability to say to customers, we want more. We'd like land as extra security. So we literally have tens of millions of pounds of other security pledged in addition to the actual asset that we're financing. So you often get the asset and the land that the asset sits on as security, and sometimes a cash deposit. And throughout the whole transaction, we own the asset. So in terms of the risk, then the default risk remains relatively stable, relatively low, relatively consistent. And so we have an annualized default rate of less than 1% a year. So what that generates as an investor is a very consistent positive return. Just to sort of emphasize that point, we come back to a couple of interesting graphs in that here you have the fund over the last nearly 7 years, the asset growth, and so forth. What we have as a group is over 250 investor groups around the world that use our funds, including a number of groups in Israel. We also have a joint venture company in London with Bank Leumi. Now, Bank Leumi comes to us and says, we know that you can get deals. You've got customers who want cash, we will finance them. So we have our fund and a funding line separate, which we run with Leumi. And we're actually in discussions with several other banks about setting up similar facilities. And in our invoice finance business, we've just set up a $50 million line with Lloyds Bank, in addition to the fund. So there's a lot of interest in this space. And when I walk around, both in Israel, but also in places like Switzerland, where we've got over 50 customers, a lot of them have the same comment. They say, I look at the world today, and equity markets look very expensive, and bond yields are at near all-time lows. What do I do? If you put your money in Sweden, Germany, Switzerland right now, you have to pay them to hold your money. It's amazing, but the world's biggest food company is called Nestle. I'm sure you've all heard of it. Right now, if you want to buy Nestle corporate bonds, you have to pay Nestle to buy their bonds. Now that says to me that all of these financial markets are at extremes. They're being pushed and pulled by an incredible amount of artificial stimulation, manipulation and intervention with all of this money printing that's going on in the US, the EU, Japan, Switzerland, the UK. Everyone's doing it, which is why the currencies are all going all over the place. And that's the opportunity. So for us, we have an incredible amount of opportunity. And if I look at our business at both ends of the spectrum, the first end is at the lending side of it, the sharp end of our business. In the last 12 months, we've had over 250 million pounds, that's nearly 400 million US dollars, of deal flow, of people coming to us wanting to borrow money for all manner of different projects, equipment, machinery, and so forth. So there's a lot of people that want to borrow money from us because the bank either takes too long, or the bank says no, or the bank doesn't understand it, and every other reason. And then at the other side of it is the investor end. And we have a record number of investors and investor groups talking to us, doing due diligence on us, reviewing us, investing with us today than at any point in the history of our business. And we manage money for pension funds in Israel, pension funds in other parts of the world, insurance companies, banks, independent asset managers, family offices. It's a very diverse group of investors. And they're all chasing yield. They're all concerned about what the future holds. And if I take what happened in the last month, the chairman of the Federal Reserve Bank, Janet Yellen, said equity markets look richly priced. Now that says to me, that's an amber warning. They may still continue to rise, but clearly now the policy makers are starting to think things are getting a little bit too racy. So expect that there'll be some increased volatility in the marketplace in the next few months and years. Whereas here, what do we add? Stability and consistency. We add value to a portfolio. So this fund here has a nearly 7-year track record. It's got about 75 positive months in a row. Tell me that doesn't add value to a portfolio when equity markets and bond markets are somewhat stretched. So again, what a lot of our investor groups that we talk to like about this is that this is back to basics. There's no leverage derivatives, algorithms, there's no high tech. It's plain old lending to the farming community in the UK. That's what people like. It's not exotic financial engineering. And so increasingly, people want stuff that they understand, that they know where the basic risks lie. And from our side of the fence, when people say to us, well, this is an interesting thing, well, what are the big risks? The two biggest risks in our business, in our investment fund, are really simple. They're your two biggest benefits turned upside down. And that is people and process. If you have good people and you have good process, you'll still lose money, you'll still have problems every day, but that people and that process helps to mitigate, overcome, and live to fight another day. And so what we have on our team are a number of very experienced people from big banks, from big commercial lending and leasing businesses who have collective experience running into literally hundreds of years. We have a former Barclays Bank commercial lending officer, 3 former Allied Irish Bank commercial lending officers, head of leasing at Royal Bank of Scotland, car leasing. We've just been joined in another business that we've got, an invoice finance business, by the former European head of GMAC, that's the General Motors Acceptance Corporation. That's one of the biggest finance businesses in the United States, who's just joined us. So we've got some very talented people, and we have a machine that has a process of administering hundreds and thousands of transactions. And we have a machine that continues to generate, to originate interesting opportunities for lending money, which ultimately translates into a fund investment to get you very consistent positive returns more often than not. So we've got lots of information out in the foyer here. We can talk a lot more. I won't spend too much more time about this, but in essence, that's what we do in our two main areas of asset finance and invoice finance. And it for us seems to be something where increasingly, as a space, it's becoming an asset class in its own right. There's an increasing number of people starting to invest in these kind of strategies that previously hadn't considered them. So they're now becoming a very legitimate, credible space to look at as an asset class, because clearly they've got that consistency and that stability in a portfolio. So I think that's really it. You can see how we talk about different areas of lending in terms of the type of structure, whether it's a lease or different types of agreement. We've got lots of background information that we can provide about the portfolio, about where and how and who we lend to. And of course we have a very robust process in terms of the investment committee and the people that evaluate the different risks and the different opportunities, which we won't go into detail today. But you can see that it's an incredibly diverse book. The average loan in our book is less than 1% of the fund. It's a very diverse book of loans and leases. So that's really it. I'm happy to take questions here or later into the foyer, and I guess lunch is imminent. Thank you.